On average, despite what people in Australia think, we're not a highly taxed country. Tax as a share of Australia's GDP is below the OECD average and below most other industrialised countries. But where we stand out is how reliant we are on personal income tax. We collect a higher proportion of our income, of the tax that our governments collect in income tax, than almost any other developed economy, and we're also more reliant than most developed countries are on company income tax as well. Whereas we collect a much smaller proportion of the tax that governments collect in payroll tax, ironically, although in most other countries it's called social security tax rather than payroll tax. We collect a lot less than most other countries in indirect taxes, sales taxes, of which the most common form is a GST or a VAT, but in the US in particular, they still have this plethora of state and city sales taxes that are all over the place. Our GST of 10% is the third lowest of all the countries that have a GST. In most of Western Europe, it's 20% or more. And it applies to a much narrower range of goods and services than in most countries that have a GST. It's only about 50% of consumption is taxed by GST, compared with about 95% of it in New Zealand. And as you say, unlike many other countries, including the United States, our personal income tax system is not indexed for inflation. Malcolm Fraser experimented with it briefly when he was in government in the second half of the 70s, only to find, of course, that indexing the tax brackets for inflation deprived governments of the opportunity to pretend to offer tax cuts ahead of each election, and instead enables them surreptitiously to raise more revenue without actually asking the people if they want to pay more tax in order for the government spending that's funded by bracket creep. So it's dishonest. And I would be, as most economists are, a supporter of raising the rate or broadening the base of the GST and using those proceeds to reduce our reliance on income tax. And when it comes to income tax, the thing that stands out about our system is not so much that the top rate is unusually high. 47 is about exactly the middle of the pack for Western countries in terms of the top rate of income tax. What's unusual is that ours cuts in at less than double average earnings, whereas in most Western countries, it's considerably more than that. So, for example, in the UK, you don't pay the top rate of income tax until your income's about £180,000, which is about $360,000. In the US, in Los Angeles or San Francisco or New York, the top rate of tax is actually pretty close to 50%. But you don't actually start paying it until your income is, depending on whether you file as a married or a single taxpayer, something in excess of $500,000. So, the fact that our top tax rate cuts in at what is, relative to average earnings, a pretty low income is one of the main drivers of tax avoidance strategies. And if we fixed our tax system in that way, we probably wouldn't have as much tax avoidance, and we'd probably end up collecting a bit more tax.